In 1982, the United States government made a calculated decision to eliminate the construction differential subsidy, a federal program that had long compensated American shipbuilders for the higher costs of domestic manufacturing. The economic logic of the era was straightforward. If shipyards in Asia could build commercial vessels for less money, the United States should simply let them. Policymakers assumed the market would efficiently sort out global supply. Following the subsidy repeal, U.S. commercial ship production plummeted from 20 ocean-going vessels a year down to just 5. By the 1990s, America's share of global commercial tonnage dropped to 0.25%, and 75,000 skilled shipbuilding jobs vanished. While Washington retreated, Beijing executed a decades-long state-backed industrial strategy to capture that exact market. Today, China's commercial shipbuilding capacity exceeds that of the United States by a factor of more than 200. Under Beijing's military-civil fusion doctrine, these sprawling commercial yards operate as dual-use facilities, building freighters right next to advanced naval warships. The 2022 Bureau of Industry and Security rules codified a reversal of this 1980s consensus, establishing industrial capacity as a primary instrument of national security rather than a secondary market output. That exact same industrial clash is playing out today on a microscopic scale in the artificial intelligence and semiconductor sector. The global semiconductor supply chain is a concentrated network of regional monopolies. In the Netherlands, ASML holds a near monopoly on advanced lithography machines. In Taiwan, TSMC dominates leading-edge fabrication. And in the United States, NVIDIA dominates advanced AI chip design. To prevent a repeat of the maritime collapse, U.S. policy pivoted to weaponizing these specific nodes, aiming to freeze China's capacity to train advanced artificial intelligence. The theory behind a choke point blockade is historically sound, but executing it across a decentralized global technology stack triggers a relentless game of regulatory whack-a-mole. In October 2022, the Bureau of Industry and Security implemented strict export controls aimed at cutting off China's access to frontier AI hardware. The regulations targeted two specific technical metrics: tera operations per second, or TOPS, and interconnect bandwidth. This schematic demonstrates interconnect bandwidth, the speed at which thousands of individual processors can transfer data between one another to pool their resources and train frontier AI models. To maintain access to the lucrative Chinese market, American chipmakers engineered an immediate legal workaround. NVIDIA released the A800 and H800 chips. These processors were intentionally throttled, so their transfer speeds sat just fractions of a percent beneath the legal limit. The government responded a year later with an October 2023 patch, shifting the regulatory metric to performance density to outlaw these highly capable, throttled alternatives. That same update dramatically expanded the deployment of the Foreign Direct Product Rule. This rule asserts U.S. jurisdiction over any foreign-produced item, anywhere in the world, if it touches American software or tooling during its creation. Targeting individual hardware specifications is an inherently reactive strategy. Corporate engineering will almost always outpace bureaucratic rulemaking. The focus has now moved away from finished chips to semiconductor manufacturing equipment, the industrial-scale, complex machines that physically print the silicon. This exposes a geopolitical mismatch undermining the blockade. U.S. controls on this equipment are significantly tighter than the restrictions enforced by allies like Japan and the Netherlands. Chinese fabricators are actively exploiting this gap, using a technique called multi-patterning. As this diagram illustrates, by using older, unrestricted Dutch DUV lithography machines, engineers can expose the same silicon wafer multiple times to achieve advanced 7-nanometer nodes, albeit with prohibitive efficiency penalties. To permanently close this allied loophole, lawmakers introduced the Bipartisan Match Act. The legislation delivers a strict ultimatum, giving allied nations exactly 150 days to align their export controls with Washington's standard. If allies fail to comply, the U.S. will unilaterally apply the Foreign Direct Product Rule to foreign equipment, legally isolating allied companies. Controlling the physical equipment base establishes a durable structural boundary, avoiding the trap of playing endless catch-up with finished chips. In January 2025, the release of the DeepSeek R1 model proved that frontier-level performance could be achieved with significantly less hardware than U.S. strategy anticipated. A Chinese firm successfully built an AI architecture approaching U.S. frontier performance, despite operating under the strictest hardware export controls in history. The strategy relies on an algorithmic evasion tactic known as model distillation. This diagram shows how commercial proxy services can secretly scrape high-quality training data from frontier U.S. models to train smaller, highly efficient foreign architectures. Furthermore, cloud computing allows foreign developers to simply rent offshore compute power, rendering physical hardware borders irrelevant. Algorithmic efficiency and borderless data transfers prove that a purely physical hardware blockade cannot achieve absolute technological denial. U.S. strategy has evolved in response to China's billion-dollar state-funded drive for complete semiconductor indigenization. Beijing has issued a sweeping mandate banning foreign AI chips in state-funded data centers, proving their commitment to hardware self-sufficiency. This prompted a controversial policy pivot from the Trump administration in 2025, beginning with the abrupt rescission of the restrictive AI diffusion rule. The regulatory timeline regarding NVIDIA's downgraded H20 chip was highly erratic, shifting from total denial to full approval in a matter of months. The administration attached an unprecedented condition to this approval, a government-mandated 15 to 25% revenue sharing model imposed on U.S. chipmakers. The administration's stated logic is that allowing these sales keeps Chinese developers reliant on the American software stack, while simultaneously funding domestic United States research. Critics argue the policy sacrifices long-term national security containment in exchange for short-term corporate revenue. This revenue-sharing mechanism marks the formal institutional end of absolute denial as a realistic U.S. policy objective. The core objective of U.S. industrial policy has now shifted to maintaining a systemic compute advantage. This chart visualizes the current landscape. The U.S. currently maintains an estimated 10-fold total compute capacity advantage over China. Modern export controls prioritize imposing systemic friction, increasing the engineering hurdles and power costs for Chinese developers. Forcing an adversary to rely on older hardware and complex software workarounds burns prohibitive amounts of capital and energy just to stay in the race. The United States lost the maritime sector because it assumed time and the free market were inherently on its side. This time, the government is aggressively using state power to buy time, intentionally slowing adversaries while it scales its own next-generation data infrastructure. Industrial policy and export controls cannot stop technological progress indefinitely. They are economic weapons designed entirely